Boarding, guys. 1 second. Okay, so let's quickly start with what is happening from stocks in general. And let me just open the chat so you guys know what I'm kind of, if you have any questions. Okay. So market mode is basically in recovery mode after the intense inflation data that we've seen earlier. We had the S&P and the NASDAQ over here. Let me open the charts. Closed in the green yesterday slightly. They kind of had gains. They're a little bit capped by inflation fears overnight, but we did see the Dow do drop. However, we do have a lot of technology apps or technology stocks that are going to do well, especially that we have Singles Day today and we have Black Friday and in 2 weeks' time, and that will really increase sales supply and more demand and everything. So sales are supposed to spike, and then therefore inflation fears are supposed to reappear again. So we're having a little bit of mixed sentiment in the markets, where some investors do think, okay, we have inflation, but hikes are going to come out earlier, so that's good for the markets. But we also have another point of view, which is, okay, it's holiday season, and prices are getting really high. There's a lot of demand in the market, so inflation is still spooking a little bit of investors. So we have these two perspectives in the markets that's going on right now. We also have the worldwide supply constraints, the supply chip indicator that is also happening in the markets. So we have, the conductors, the chip conductors, that shortage that we're seeing, and that's why when we go to, like, for example, car showrooms or everything, they always say like 5 months minimum to order a car. So this is really like showing that we do have extreme high demand and we have little supply. We had Veterans Day yesterday, and so liquidity or volatility in the markets was a bit slow, but let's see how things we're doing in general. So as I said, the Dow obviously corrected yesterday. We dipped, just a sec, we dipped below here. We had a support level. I'm just going to remove that. We had a low of 35,926 right upon this area. Let me zoom out. So we're basically just curving back into a downtrend for the Dow Jones. Obviously, this trend is mainly because of inflation fears, as well as it's a mild correction before holiday season. So we could expect to see it drop even below, but we can place a new support level that would make things easier for us. Apologies. So we can place our next support level at 35,900, right about here. I'll just place a dot for you guys so you know, so you can catch it more clearly. So 35,905 is where I would place my support level. If we do break the support level, then we should be able to go into a little bit of a sideways pattern. However, there's no 100% indicator that says that the rally should end for the stocks, especially with more demand and sale and holiday season, everything that's going on. The rally doesn't have really much of an indicator to stop. The only thing that would actually pull down this rally into a severe correction is increased rates. But so far they're not on the table yet. They are on the table, but they're not into action yet. So we do have one Fed member, New York Fed President John Williams, who will speak today at an online conference, who we hope to see some indicators or some signals as to what the Fed members or policymakers think of the high inflation number that we've seen 2 days ago, and that really spooked markets. So let's take a look at gold. So obviously gold rallied right after inflation data, because gold is used as an inflation hedge. We can also see greater performance in commodities or gold stocks. I will call out the name for you guys. So we had Freeport, Morin, Copper and Gold, and Nucor amid they had really increased metal prices, and so their stocks did really surge overnight. Okay, so back to gold. We are seeing here increased performance for the gold at levels of 18,058. We're still below the high that we reached at 1868 previously. We've reached 1868. I'll just drop this resistance level at 1868. We did see, so we're hovering slightly below that, but we do know and we do realize that levels of 1838 to level of 1846, this level, if we enter back to this level, it will be really hard to go even drop more further. It will be a strong support level, and I will show you why right now. Because we stayed in this area for a bit of some time, right over here, in this area, in this area, in this area. Let's see if we can even zoom more out. So right now we're here, and we've seen this performance before, especially over here. Anyway, this just means that we do have really strong support area for gold, and we did yesterday break the support area at 1846. However, we're expecting to see gold, it does have some potential, especially with inflation fears going on, and especially with commodity stocks or like gold stocks that are really going up right now. It's definitely being used as an inflation hedge. And it did really took focus on the market when it did that sharp move over here. So far we're on uptrend. Today in the Asian session we did dip down a little bit to back to levels of 1858. And I'll just read something for you guys. But we are staying near a 5-month high, and it is still used as an inflation hedge. So this could really mean a little bit of, it's a narrow range, but I would say that unless we do break the support at 1846, then we should stay in between these levels for now. We also have the USD at its strongest point ever. The USD is at 95, and we have not seen this level. Let's see, since when? We have not seen this level since 2020, and it was for a short period of time, and it was when the dollar was extremely high and it actually went lower. But so I will not compare it to 2020, but anyway, we haven't reached this level in almost a year, or maybe even more than a year. So we do have rising USD, especially after Biden did speak about energy prices and maintaining energy prices. We're seeing a lot of volatility shifts, but overall the USD is also used as a safe haven so far since the pandemic year. It hasn't been before that. So we're seeing the USD climb as well as the gold. This means it's really kind of surprising in the markets, because it doesn't usually happen. They usually have a negative correlation, or they go inversely together. So we're just gonna have to wait and see what happens. We don't actually have important data for today, only the JOLTS job openings, but I don't think that it was going to have any sharp moves in the market. Most of all, we are having a peachy earnings seasons as well, and we're seeing better earnings, better growth forecasts, and so markets are still in a pace of rally, but the inflation figures really did take a toll on markets, and that's why we're seeing mixed performance. Anyway, moving back to the GBP, we are still on a downtrend. We are back to levels of 133. We even broke the 134 handle. And this all started when the Bank of England didn't talk about, they actually did not change their interest rate hikes and kept it at 0.10%, and we're just going down further from there. And this also is because of the USD support, the USD strength. So we're just seeing a little bit of downtrend here. It's not even a little bit, it's more than that. Especially that we did hit kind of a resistance level and then we dropped down again for the GBP, and that's what's happening. For the USD JPY, we are back to levels of 114, so that's also a short move that happened recently. We are still trading in a sideways trend, and let's look at the weekly. On weekly, we did cap some gains, and then we are back to sideways trading. However, the yen is getting really weak. There's a lot of things going on in Japan, and there's still restrictions, and there are still economic indicators that prove the economy isn't doing as well as pre-pandemic levels, just like the US or China. So it's also weighing on the yen, and the dollar strength is also weighing on the USD JPY, and that's why we're seeing it at 114. Anyway, guys, that was it for today. I hope I mentioned